My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to make you some money. My job is not just to educate, but to entertain and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The asterisk. It's a wonderful thing. It allows you to take all sorts of liberties as long as you're willing to take a little more risk than you normally would. In fact, I think the asterisk saved the whole darn session today, with the averages opening down a bit before they came roaring back. Dow only gaining 435 points, S&P jumping 1.84%, and Nasdaq surging 2.69%, led by a bunch of asterisk companies. All right, what the heck am I talking about? Let me explain. This morning, right after Squawk on the Street began, we were handed a news release which had some revised numbers for the quarter from none other than software and web king Microsoft. As you can only imagine, in this treacherous environment, their visions were not good at all. It seems that because of currency fluctuations, namely the strong dollar, Microsoft would not be able to meet the estimates. I turned to my partner, David Faber, and said, we saw that happened. The exact same thing happened the other day with Salesforce.com when it reported, and it didn't matter. So it shouldn't matter now. But I immediately also acknowledged that we have to go through the whole torture of a decline, perhaps a hideous one, before people realize that you can asterisk the currency, that it just doesn't matter. David then said what matters, of course, is there's demand, and obviously there's demand even at these exalted dollar levels, which is actually even better. Sure enough, Microsoft stock opens hideously and then sheds as much as 10 points until it stabilizes. Next thing you know, the stock starts to trade higher. And by the time I did my 12 o'clock CNBC investing call, it was only down 4 points. I pounded the table hard on the asterisk revision, a type of shorthand for saying this number cut doesn't count. By the end of the day, the stock's actually up a couple of bucks and helps lead the market higher. To me, after months and months where everything has been viewed with negativity, this U-turn in the stock of Microsoft is incredibly important for you. I say that because this is now the third time in a week where Wall Street was willing to overlook textbook bad news. Asterisk it away. The first happened last week when I was away. NVIDIA reported solid first quarter results, the chip company, but gave much lower than expected guidance for the second quarter. The stock was looking down horribly. It opened down nearly $10, but quickly reversed, and then it ultimately advanced 5% that day. It could rally because management did a very good job explaining how the shortfall was caused by China's lockdown. If they weren't able to sell anything over there, and they couldn't make some stuff either, how can we count? How can that count against them? Yet they still came pretty close to making the numbers. It was really extraordinary. In other words, the market actually asterisked the China lockdown. The market accepted that China's zero-COVID policy could cause NVIDIA to miss the numbers. Not any shortage in demand. This is a radical departure from where we were as recently as 2 weeks ago. Remember when Cisco got pummeled for saying pretty much the exact same thing? Apple's been trading down endlessly on China. Think about Nike, Starbucks even. Can you imagine if we're willing to asterisk their Chinese misfortunes? But by the time NVIDIA reported, Wall Street had a new, much more positive attitude. It shifted. Then there was the alleged debacle of Salesforce.com. As soon as the company reported, the stock headed down because they so-called cut their revenue forecast. But go listen to CEO Mark Benioff when he came on the show. Go listen when in his conference call when he explained the forecast cut. He described an insane world where it's incredibly cheap to be a tourist in Japan, joyous even. But if you sell software into Japan, you get your head handed to you because the Japanese central bank has gone all in on debasing its currency in order to drum up business. When people realized that Salesforce's lowered forecast would still be above what analysts were looking for, notice they added it back, the stock soared. And just like NVIDIA, the stock has never looked back. And as I told members of the club on my noon call, it's still way too cheap. It can still go much, much higher. So now we have to wonder, has the psychology of the market truly changed? Ever since the Fed started talking tough in November, this market has turned heinous. Pretty much everything except for energy or the utilities, where there's nothing to asterisk except for, let's say, a rare errant state regulator. We've had to endure endless declines based on port congestions, trucker shortage. We've had to bear the overtime cost for COVID, some workers to fill in for absentee colleagues. We've taken pain and pain and pain, having to fly in goods from China because the port fiasco means ships take too long. It's been an endless parade of excuses and apologies, no asterisk in sight. But I think that slowly we're discovering that at these reduced levels for stocks, Wall Street's now willing to accommodate these shortfalls that are, let's say, called beyond management's control. Now, will the market look back and reevaluate? If Cisco report here today, right now, I think its stock wouldn't have been shelled nearly as hard. Maybe not at all. I believe the Best Buy stock might have soared, given everything you could say in an asterisk in that quarter. I'm not saying management will get a free pass when they drop the ball in terms of execution. My charitable trust is still smarting from the problems at PayPal, nice rally today, thank heavens, and American Eagle Alphas, as those who listen to today's club know all too well when I beat myself up about them. But I'm starting to believe that this previously unforgiving market has found a level where it can forgive and even forget. So why is that? Is it because we've had some less than smoking hot data of late, some weaker housing numbers, some not too steaming jobless claims? Maybe, but I think the data still indicates we need a bunch of additional rate hikes. Is it because we're beginning to believe that China has COVID under control? Maybe, but who knows with COVID? How many times have we thought we have beaten it and then the darn thing pops right back? I think it's something else entirely. See, we're finally at the point in the stock cycle, not the economic cycle, but the stock cycle, where the underwriters are no longer pumping out the bilge, these lethal IPOs for which there's no appetite whatsoever. They've stopped flooding us with new supply. Enough money's been lost in the new. Why go back? Why not just go back to the old? Most of the stocks that have become public in the last few years can only be described as abysmal, if not downright disgraceful, especially these miserable, shameful SPACs. You couldn't asterisk their mistakes. In many cases, the whole enterprises were a mistake. Often they should never come public. It was only the greed of the venture capitalists who funded them and the investment bankers who got these great deal cuts that inflicted these deals on you, which is why I spend so much time warning you away from them, even if I became a bit of a scold. The point, though, is that the recent IPOs are falling by the wayside. They're going away. They're dwindling. Sure, you get the occasional rebound like we saw in Chewy, which reported a pretty solid quarter last night, although technically Chewy came public in 2019, much more legitimate than the IPO class from 2021. So many of those companies are simply not going to be given a second chance because they won't have enough money to get back on course, and it's suddenly a lot more difficult to fundraise. The lack of new, broken the moment you buy its stocks, and the horrendous declines in very valuable companies have coalesced to create an environment where Wall Street's willing to overlook some of the imperfections. Not all, but some. Once you realize that you're free to overlook a blemish or two, and because the stocks have been so crushed in anticipation of multiple rate hikes, you can be bold enough to buy a discounted product without much hesitation. I think we've finally reached that level. Bottom line, the asterisk is back. As long as the asterisk in question passes the NVIDIA, Salesforce, Microsoft tests, then you're free to do some buying. Let's go to Jeremy in South Dakota, please. Jeremy.
Booyah, Jim.
Booyah.
Hey, good info on the Investment Club today, so thank you.
You're quite welcome.
I bought into AirB back in April when it was in the high 140s. Bought some more after you had CEO Brian Chesky on. Had a lot of good to say about it. Huge first quarter with 70% increase in revenues as traveling was coming back. Obviously, they've kind of stayed around the 120 range and lower here lately. Is it one of those you sit on and wait, buy some more, or get rid of?
Okay, this is one of the few, actually maybe one of 4 or 5, that I actually say you can buy because the cash flow at Airbnb is extraordinary. They are making a ton of money, but people don't seem to understand how to read a balance sheet. I think Airbnb is a buy. Let's go to Josh in Florida, please. Josh.
Hi, Jim. Booyah. I'm
Booyah.
calling about Norwegian Cruise Lines. It's about 70% below its pre-virus high, and they recently announced strongest bookings month ever. Is it time to get on board?
Well, look, I'm not recommending any stocks of companies that are losing money right now. There's too many companies that are making a lot of money. I don't want to do it. If you want, look, Norwegian is my favorite in the group, but I am not recommending money losers anymore. It costs too much money for people when there's so many companies making fortunes. Drin in Wisconsin, Drin.
Jimmy, a big Balkan booyah. First time, long time, buddy.
I'm liking this. Where are you going?
Quick shout out to the Slow Rug group chat and a happy birthday to my cousin Dennis.
Yeah, definitely.
Is for the chill man. Datadog. 2 good back-to-back quarters. Good revenue, good growth, decent amount of cash on hand. What are we thinking?
I think that, look, I agree with you. It's just that it sells at 150 times earnings. It is a very good company. It just happens to be too expensive. The stock's expensive, the company's great. And that's the way it is. Guys, we have to asterisk things. In other words, the asterisk is back. You can overlook a blemish or two. You can say, wait a second, that may not be as important as we think. That's called an asterisk. As long as the asterisk passes the NVIDIA, Salesforce, Microsoft test, you are free to do some buying. Well, Mad Money tonight, Wall Street fury of potential Fed-mandated recession. What should you make of a company like Dow? Does it deserve an asterisk? I'm checking in with the CEO. Then Deere got crushed after earnings, so is it time to circle back to the farm equipment maker? I'm going to give you my take. And I found a glimmer of green in this otherwise difficult market. Don't miss my exclusive with the head of Accelerate Energy. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.